Welcome to the Executive Real Estate Investing Show. This podcast is for you, the busy business owner or executive looking to create generational wealth. Here, we're going to show you how to do that through real estate investing, from multifamily to industrial and everything in between. You will become a real estate investing expert. And now, here's your host, Michael Holman.
Hello, everyone, and welcome to another episode of the Executive Real Estate Investing Show. Your host, Michael Holman, and we are excited to have you with us today. Today, we have a special guest, Clay Hepler. He is a wealth consultant. He's been investing in real estate. One of the most amazing things, right? There's two really unique things that I love on this episode. Number one, he worked in a chocolate business with his family, which just almost sounds like my dream job. It almost feels like talking with him. He's talking about making all this addicting chocolate. I can't decide if it'd be really good for me to work in a chocolate business or most likely really, really bad working in a chocolate business. I'd probably struggle with my health if I worked in a chocolate business, but really unique. And it's fun to listen to him talk about that experience. And number two, this is someone who at a young age, right, over the course of just over a year, has gone from 0 units to 13 units. And we're going to get into detail on what that is, right? What are the struggles? How did he get started, right? That's a question that so many people have. How do I even get started in real estate? Like, what do I do just to get the first deal? How is that even possible? So we're going to get into that. And I love his responses throughout this conversation. And if you haven't, little plug, if you haven't been there, go to executive REI show.com. From there, you can get to the show notes. You can get a newsletter. You can ask an executive question, all of those fun things. Go check out the website. Also, hit subscribe. If you're listening on Apple Podcasts, Spotify, Stitcher, Google, wherever, hit subscribe. Love to get you listening to the show on a regular basis. We got amazing guests that are always coming on. Really fun, exciting time. Get you learning about real estate and business. It's amazing. Hit subscribe. Leave us a rating and review. We would love it. And as always, before we get into this interview, we are going to start with today's executive tip. And today's executive tip is it is time to expand your network. I call it a tip. I'm going to chastise you a little bit right now. Quit what you're doing and go expand your network. Because guess what? The relationships that you have and the network that you have is vital. It is critical. And one of the things that you need to do on a regular basis, if you haven't taken some time to strengthen or expand your network, it is time to pull your head out of the work sand, right? Whether you are just moving and grooving on in your mechanic shop, whether you are just pounding the sales, whatever that is, I'm going to tell you, you need to take half a day, pull your head out of that work sand, go strengthen or expand your network. It will do wonders for you, right? Whether that's take someone golfing, go to lunch with somebody, put on a little event, whatever you got to do, strengthen and expand your network. It's going to help you exponentially. And without further ado, we are going to get right into this interview with Clay Hepler. Hello, everyone, and welcome to another episode of the Executive Real Estate Investing Show. As always, I'm your host, Michael Holman, and excited today to have Clay Hepler with us. Clay and I were just talking a little bit before we started recording on the show. He has been doing a lot. He's a Pittsburgh native. He's buying a luxury Airbnb in Colorado. He's getting married in Spain next year. All sorts of cool things. Clay, welcome to the show.
Mike, it is a pleasure to be here. I view time as the highest valuable resource. So I appreciate the listeners, number one, listening to us, and number two, you inviting me on the show.
Absolutely. And we're glad to have you. Clay, tell the listeners, tell the people who are watching the show a little bit about yourself.
Yeah, so I am a government dropout. My basically my background was I was interested in becoming a diplomat, specifically an ambassador. My background was in U.S. Latin American bilateral economic and political relations. So I was working for the embassy, U.S. Embassy in Buenos Aires in Argentina, in South America, those who don't know. And I was thinking that this was going to be my path. This was going to be I'm going to be Clay Hepler, the ambassador, and specifically in a Latin American speaking country, because I speak Spanish, and so it was perfect until I got there, right? And I was stamping passports, and I was working with local NGOs and sort of micro entrepreneurs, and it was really a poor experience. And as your listeners probably know, that business owners or executives, and that it wasn't very meritocratic. It was very hierarchical. And so, you have to put in 5 years, Mike, to get to the next rung, and then 5, you know what I mean? And it wasn't like input to output, which I'm sure we'll talk about today. Input, put in something and then you get an explosive returns. And so I really didn't like it. And so I took some time. That was I was in college at that point, and actually took time off of college and joined a family business, luxury chocolate, luxury toffee. And I scaled the business from 2 to 42 states in 18 months. Now, we were working with specialty shops and sort of like mom and pops, like think about Whole Foods, but on a smaller scale. And during that time, I actually met a guy that was worth about 120 million. And I didn't know what to say, right? Like I just said,
a little shell shock.
Right. It was a tremendously successful real estate entrepreneur and also business owner. And he was at a major metro in the East Coast. And basically, maybe he took pity on me. Maybe he was like, oh, this is a tenacious young guy. I want to help him out. So he taught me a lot about, basically told me about a family office structure, right? He told me about wealthy people just sort of operate differently. They sort of act differently. And he showed me a team of advisors. Like, I didn't know you could have multiple attorneys, multiple accountants, people on your team that are on payroll that are helping you think more efficient and effective about your decisions related to building wealth, maintaining wealth. And specifically when you're a business owner and you're in that age of your life, you're thinking about maintaining your wealth and passing on to the next generation. But he taught me a lot about, business building, and I sort of applied it to the context of the family business. I'm no longer involved. And that was all amicable. But I decided that I wanted to get into real estate. So I joined a firm locally in Pittsburgh and, started doing their acquisitions work, and then just started buying stuff on my own. And all along sort of took the mindset, the methods of my mentor and applied it, and sort of built my own, financial consulting business as well, which is sort of my full-time gig. I know that was a lot.
No, I love it.
That's where we are now.
Clay, you got so many things to dissect there. I am excited to even get started, but the one that I got to start with, right, is the one that everyone's thinking, right? You met this person who is worth about $120 million. You talked about him, talking to you. I mean, what did he tell you or advice that he gave you that stuck with you?
That's a really good question. I think that when I reflect back on our relationship, when you're young, I had this conversation with a friend of mine that, we had dinner with him this past week, Mike, and he came in and he was talking to me about his brother. Now he's in sort of his late 20s and his brother's like 16 years old. And he was trying to talk to his brother about sort of like what's going on in his brother's life. His brother's sort of struggling with something. And he said, I just couldn't sort of like relate to him. Like I couldn't really speak to him on the same level. You know what I mean? Mm-hmm. And so I feel like when I reflect back, it was mostly my mentor sort of like talking to me about concepts and ideas and me sort of like questioning them. And now it's sort of finally making sense to me. But I would say that the biggest thing, I just sort of contextualize that, the biggest thing was he stuck to what he knew best. Okay. And a lot of times, he told me that a lot of times, he saw his friends that were, going from this to another thing, to another thing, to another thing. And he first started in real estate. He stayed in real estate. And later when he aggregated a significant amount of capital, that's when he sort of diversified. But he focused on the real estate business, everything related to the real estate business development. And this is in Washington, D.C., mind you. So it's a very competitive market. Yeah. and he grew that business. And so he basically, the biggest thing that he taught me was about, staying focused, because when you get wealthier and wealthier, more opportunities come to you, and you have to stay focused on the one thing.
I love it. That, that almost sounds like the title of a book, Clay.
I pulled that right here. I pulled that right out of the ether right there. The one thing, right?
I know. I'm just joking. No, it's great book, by the way. In case anybody's listening, go read it. It's awesome. Well, Clay, that's really interesting, because I completely agree. You see these people, and it's usually at first, you have some people that just start off that's like, hey, I want to do everything all at once. Right. I want to build an empire, and I'm trying to build an empire from day one. And so I'm going to do these 20 different things. You have some people that are like that. Most people are okay starting in a niche, right? I mean, they'll start with what they know. And it's usually after that first big success, right? It's that first traction to momentum that's when the wheels kind of come off, just like you said, because all of a sudden things open up and it's like, oh, well, I did this and it worked. Maybe I should, follow this shiny object, and I'm going to go follow this shiny object. And it's usually after that first big success, that's when I find that most people struggle the most, because they don't want to stick with what they know, right? That's when they want to say, that worked really well. If that worked really well, why don't I go after it? They start getting this shiny object syndrome, right? Where they start following all the different things. The next thing you know, they're not even doing the one thing that got them to that point in the first place. I was even just talking with my wife the other day. We drove past a billboard. There was a company that here in Utah has been really successful. And I saw these billboards like, this company now adding this thing and now adding that thing. And this was like 6 months ago. And I remember saying, this is the start of the downfall for this company. Because what they've done is they've taken what they were really good at, and they just diversified into like 3, 4, 5, 6 other things all at once. And it's kind of funny. It was actually just recently that this company had major layoffs, right? I mean, they just laid off something like 20-30% of their employees, right? I wish I could predict the future like that more often, but it goes exactly to what you're saying. So I love that. Well, one of the other things that I want to kind of get into, right, is we kind of glossed over this chocolate business. That is a little unique. Yeah. I think most of us would probably love to be in a chocolate business, although I don't think I'd be doing much business. I think be eating more chocolate than anything. Tell us about that, right? You talked about growing it from 2 to 42 states. Tell us how that experience was.
Yeah, I mean, basically I came in, and it was literally a mom and pop business. It was the family business. And I don't know if I would give that much credit to myself. I was just a tenacious salesperson, and I knew how to talk to people, and I built relationships with essentially like wholesale aggregators. So, I would build a relationship with like a specific specialty shop that knew a bunch of other specialty shops in this area. Or like we went on sort of tech platforms that you could put all your products on, and then it could distribute, and they get sort of a commission. So the way I approached it was, first I was sort of like, okay, one lane thinking, which was like just cold call until you die, right? Like cold call, like, $120 a day, which is great. And then I realized that was like a great way to do it. But the more effective way to do it, the leveraged way, is to focus on how do I partner with people to really scale it. And the reason why we were like, for the first year, we probably went into 15 states, and we were ecstatic on the East Coast, right? And then we joined a couple of online aggregators. You put your products up and they get a percentage of the commissions. We built strategic partnerships with them, and then we just exploded because we used other people's networks and leveraged their networks to basically exploit the business. And that's where it really, really took off, because it was thinking not about just how can we do it, knocking on doors. It was like, how can we start to leverage other people's relationship in a win-win manner to really really scale the business.
Oh, I love it. And there's a couple of things, and I think you alluded to this, but I got two questions, follow-up questions to that story. Number one, well, I mean, what was the most difficult aspect of the growth, right? I mean, if you had to pin it down to like the one, maybe two most, what challenges did you face as you're going through this time?
I would probably say it's the commodity aspect of the business, right? Like when you're dealing with chocolate, you're dealing with, having to, basically you have to ship the inventory into your stores, right? And so, you want to have time in such a way that you have inventory in like products and raw products is with a little amount of time as possible. And then you want to like get it out the door as fast as possible, right? Because if you have product sitting, that's costing you money. So the biggest thing is when you grow very quickly, 3 digits and triple digits in multiple years, you don't really know how to like handle that. So the organization of that was very difficult. For sure.
I totally get it. I mean, I absolutely get it, right? And this is something that we've actually been experiencing in our business, not from like a supply chain standpoint, but from like an employee standpoint, right? I mean, when you have this hyper growth, that's been our big thing, is we're constantly needing more employees, and we're always balancing, hiring more people versus making sure that we're not over hiring and trying to balance that. But all of that talking that you just did about supply chains just took me back to like a supply chain class back in college. And I'm sitting here thinking like, just in time manufacturing and all these different things, but I love it. These are interesting things and things that really apply to a lot of people that we talk to. So really the next question that I had related to this chocolate business, right? What do you feel like was, and I think you alluded to this, what do you feel like was the fuel to the fire, right? I mean, if you were to boil it down to, hey, this was our secret sauce, right? What was that? Was it the taste of the chocolate? Was it, something else? What was it?
Yeah, I mean, it's frankly like addicting. It's really, really a good product. So again, like I will say this, it made the scaling easy. Like I would say, so one of the things that I would do, Mike, is I would send samples to people. So I would like, find a bunch of specialty shops in a specific area, like New York City, right? Like, and I'd get all the higher end specialty shops, and I would, find out who the managers were, and then I would ship them samples, $10, ship them out the samples, or $15. And then, we would get an order because it's so addicting. It's like crazy good, so it wasn't really a hard product to sell because it was high, gluten-free, all natural ingredients, very high quality chocolate, and addicting. Like, so it's like chocolate dealer or drug dealer. One of the two, they're pretty similar, right? They're like interchangeable. So there was a product.
Just try this. You'll never be able to stop.
Right. Exactly. It's like we would get people would call us and they were like, this is like crack cocaine. Like, this is crazy. And people would say that it's really a crazy product.
Well, Clay, I'm sorry, I'm gonna have to tell you this, but if it turns out that these are laced with cocaine, we probably can't air this episode.
Right.
No, that is awesome. I love it. Well, hey, I read your bio and kind of going through some things, and I'd love to kind of get into some of this real estate, right? I mean, you talked about buying, just before this, we talked about buying a luxury Airbnb in Colorado. I know you have, multiple units that you own. Talk to us about what you're doing in the real estate world.
Yep. So this is all sort of with my own capital. We are under contract. I never like to, as as a real estate guy, I never like to say we're going to close until we close, right? Mm-hmm. So we're under contract, should close here by the end of March. I'm hopeful. I'm very, very hopeful because I think we got it for a great price, and it's a killer deal. But basically, I started my real estate journey like 13 months ago, and I purchased 13 units all using my own cash. I did a house hack, 3-unit house hack, Then I bought another 3-unit, then bought a single family home, burned both of those, and then bought a 6-unit that we're going to be able to burn, get all of our capital out and some, and looking to continue to scale into larger multifamily properties in this area. So that's sort of my journey. I mean, I did it in a little over a year, all that stuff. And obviously I have a fiance that's tremendously good at making places look really good for great prices. And so I will say most of the success is to due to her and her eye and how to make places look awesome. But yeah, so that's sort of been the real estate journey.
Okay, I love it. Well, here's the question that I have to ask, because I get this question all the time, and it's different for every person, right? Everybody has their own journey, but the number one question I get asked by these young, aspiring real estate investors is like, I look at a home or some other real estate investments, like, how am I ever supposed to get the capital to be able to even do my first deal or second deal, right? I mean, it just seems so foreign. You come out of college or something like that, right? You might be making a good salary. Let's say you're making, 50, 75. I mean, you can be making $100,000 right out of college, right? You got the solid salary, and it's like, how am I ever going to get the capital that I need to go purchase a $300,000, rental property to get started in real estate? Talk to us about that very first deal. What did you do? Maybe the first and the second deal, right? How did you get this started? How did you get the train rolling?
Yeah. So, I mean, we bought a 3-unit for $202,000, put about 160 into it. This was through an FHA 3.5% down loan. I think we had to come to closing with like $15,000. Like, anyone could save $15,000 in a year if you're just disciplined. It appraised for $550. So we created a tremendous amount of equity with just that first deal. We put a line of credit on it. My fiance makes good money. I make good money. And so we save aggressively, and we went out and bought another deal. We found a good deal. And so I think that the question is how will I ever get that much money? My question is, how can you afford not to do this? Like, how can you afford not to buy real estate as soon as possible? Because we know that real estate, although there's ups and downs, we know that the Federal Reserve is printing money. We know that inflation's at all time, at 40-year highs. We know that asset prices are going up. People are seeking yield, and they're finding it in real estate. And so, people are going to get priced out soon. Most people are going to get priced out soon. So you got to get in on the action. And I could talk about that, but there's tremendous amounts of first-time home buyer loan products that you can get 5% down, 3.5% down, even 0% down if you're a veteran, or if you're a USDA loan, you could find a single family home in the middle of nowhere. I know where you are. You could find, you see that mountain over there? You could just go right over there. And you get the USDA. Yeah, just right over there. Just right over there.
I have to laugh because you go right down there and you're on the backside of one of the nicest ski resorts in Utah. So you might not be USDA.
Yeah, right.
But you're maybe another 100 miles that way. You're definitely going to get there. There's plenty of USDA property in Utah.
It's actually very easy to get in. I think that there's just a limiting mindset around it.
I completely agree. And that's one of the things that I see, right, is there's that old adage, right, where there's a will, there's a way. And I find that's very, very true. And most of the time it's the mindset, right? It's the sooner you break out of the mindset, because you mentioned just a few of those, right? I mean, you mentioned different loan options. I mean, you can partner with people, you can house hack, you can do all these different things to just get the ball rolling, right? You just got to get something started. It's taking some sort of action. And the one thing that I always have to tell people that I think you could attest to, right? Oftentimes you get people who want to get started in real estate, and they're looking at the person who's been doing it for 10, 20, 30 years, right? Who has capital, who has all the network and connections and, everything that they need. And they're just churning through giant deals all the time. And it's like, oh, it just feels like what they're doing, like they're not even working. They work like 30 hours a week, I'm pretty sure. And they're doing all these amazing deals. And like, that's what I want, right? And they think, well, if I'm doing it right, then from day one, I should be working 30 hours a week and just making gobs of money, and everybody's going to want to do business with me and come to me. Right. And it's like, look, when you get started, you got to understand you are at the bottom of the totem pole, right? You're going to give up more than you want to give up. You're not going to make as much as you want to make. You're going to spend way too much time on this than you really should or need to. Like all of those things, it's going to be exponentially harder when you first get started. But at the same time, as you go along, those things get exponentially easier with every passing deal, with every passing investment, with, every time you have another year of experience, every time you have another deal under your belt. And I'd like to get your take on that. Having scaled from just a single house hack up to, these 13 units, what do you feel like it's gotten easier from the first deal? Has it gotten harder? Has it stayed the same? How has that been for you?
Yeah, and let me just touch on your earlier point. Like you go on Instagram and you see the guy in the Bahamas with working 20 hours a week with $200 million of real estate and bikini clad girls around him in Lamborghinis. and then you wonder, like, is most of this person's money that they have, is it in real estate, or is it actually in coaching people how to start real estate? Like most of the people that I know that have been in the business for a long period of time always talk about, there's a really difficult time at the beginning of this whole journey. I think it gets easier. Of course, you see new deals every single day that are going to, they change how you look at them. Like an Airbnb, Mike, is going to be really different than my 6 unit, right? That I'm renovating now. It's a lot. We're going to do $600 to $800 to $1,500 on high nights per night, right? Like $1,500 is like a month rent, right? So it's always changing. But when you think about getting the fundamentals down, that's the most important thing. I think that a lot of times, you can attest to this, right? That people cloud what real estate investing really is. You got to buy a property for a price that makes sense. You got to have the cash flow, pay for your debt, pay for your expenses, pay for your property management, pay for your taxes and your insurance. Now, the higher you go above that, the better the deal is. Now, if you want to go below that, there are arguments to be made to go below that if you're buying in a high appreciating area, maybe like you in Utah, or maybe in California, or maybe in the nicest area of your neighborhood. There could be an argument for that. I'm looking for cash flow right now, a little bit of appreciation, but there are so many ways to make money in real estate. It's sort of like just pick one and stick to it and focus on it, and try to put yourself around people that have done it and stick to your numbers.
I love that how you broke it down to really its simplest form there, right? And kind of a theme that we see throughout people that we talk to is like, look, oftentimes it's just getting started. I mean, we've been hiring a lot of new people, and I often, when I'm doing an interview with them, I always ask them the same question, right? It's like, hey, look, we're growing a lot. There's a lot of new things happening, stuff that people haven't even ever done, right? I mean, that just happens when you're growing and you're doing more and more. And I always ask them that question, tell me about a time that you had a project or an assignment, and when you got it, you looked at it and you're like, oh, I got no idea how to do this. And walk me through the steps on how you successfully completed that project or assignment, right? I ask every single person, regardless of who I'm hiring. Every person who gets hired in Overland has been asked that question if they've been interviewed by me. And the interesting thing that I find is through their responses, there's a theme, right? And they don't even know there's a theme. And I can attest to this. When you're looking at something that you're like, I have no idea how to do, it's oftentimes that 10 to 20% at the very beginning that is by far the hardest, right? It's just getting the knowledge and the information to do it. Once you have that, and it's like, oh, now I know what to do. I just need to go do it. That next 70, 80% is oftentimes significantly easier, right? It's that 10 to 20% that's just getting past that hump that sets the stage for everything else. And I think real estate investing is the exact same way, right? I think how you've described it in its simplest form, right? It removes some of the concerns and the worries that these first-time real estate investors often have.
Yeah, it's easy, but it's not simple. It's fundamentals, but like, what's the difference between Kobe Bryant and other basketball players? He just focused on the fundamentals more. He focused on, for example, of real estate, you underwrite more properties, right? In my business, it's like, I need to talk to more people, for the cash flow management part of my business. I need to talk to more people. I need to be able to explain this better, right? Simplicity is a sign, in my opinion, of intelligence. And if you can get the simple things right, looking at a deal, underwriting it properly, understanding that you got to cover your debt, you got to get a little bit above, and the higher you get above, the better the deal. It's that simple, right? Like, everything else is included in that, right? Like, windows, I need new windows, I need a new roof, I need new boilers or HVAC, I need to put my renovation in there. But really, you're looking at like 3 points, right? Cash flow, expenses, and then renovation. And when you can find the combination of that gets the most amount of cash flow in a conservative way, and you're making sure that you're not super like over leveraging, then you win and you get a good deal.
Yeah, no, I love it. I think it's fantastic. Well, what for you through that journey, on these 13 units, what was I'm going to ask that same question that I did with the chocolates. What was the most difficult thing, right? Was it getting the first deal? Was it getting the biggest deal? Was it something else? What was the most difficult thing through that process?
Dealing with the obsessive compulsion to buy more deals. No, I'm just kidding. You know how it is as a real estate guy. You know what I'm talking about. No, so the most difficult thing is honestly just, it's very discouraging to look at so many deals and not get a deal, to place so many offers. Like, real estate is easy. It's simple, but I'm sorry, it's simple. It's not easy. And the hardest part about it is it's kind of boring. You know what I mean? Like, you look at so many deals and you place so many offers, and you just gotta keep pushing through. And the hardest part about it is really overcoming the disappointment of, oh my gosh, another deal, man. Like, offered on a 20 unit, didn't get that one, right? Like, offered on an 8 unit, didn't get that one. Offered on, another 5 unit, didn't get it, right? Talk to this seller. That price is ridiculous, right? Like, it's really the disappointment. And that's what I think kills a lot of real estate investors.
I completely agree. Honestly, I kind of am laughing because that, honestly, especially when you're getting started at an early age and things like that, that is one of the hardest things, right? People oftentimes get so emotional right at the beginning, right? They're like, I'm going to do it. Let's start. I'm excited to get invested into real estate, and all of a sudden they either get overwhelmed, or they think they found the perfect deal, right? Like, I found it, it's just, I haven't made any offers yet, but this is it. This is the one, right? You spend all this like time, you're daydreaming about it. You submit the offer, you're waiting, you're talking with the broker, you think it's going to work. And next thing you know, the deal went to somebody else, right? And emotionally, that takes a toll on you, right? And you kind of have to have the same mindset that the best salesmen in the world have, right? Where no means nothing, right? Like no isn't a bad thing, right? It doesn't mean that you failed. It's just no. And you try and work around it. And if there's not an option to work around it, you move on to the next one, right? And that's kind of the skin that you have to build, depending on your process. But that's what you have to do. And so I love that you say that, because I think it outlines perfectly one of the things that dissuades or discourages most first-time real estate investors, but they don't know or understand or realize it going into the real estate investing world.
Yeah, I mean, I completely agree. It's with business, like with my business, currently, with other people's businesses, it's like, it's painted very attractively. And really, business is, I think Bezos says it's like, business is like 60 to 70% overhead, and overhead is like the difficult stuff, right? Like the 30 or 40% of getting a deal done, getting that cash flow is the minority of your time, of your experience. The majority of it is doing the hard work, the necessary work to get the deals under contract, to scale your business, to focus on marketing strategies. Like, how can I think differently about getting to this owner, or how can I, provide value in such a way that people are going to be attracted to my services, or whatever it is. That's the majority of business.
Yeah, agreed. I love it. All right, Clay. Well, we are going to kind of wrap things up. We have 2 questions that we ask every single person who comes on this show, and get ready. First question: what is the best business advice that you were ever given?
Yeah. So the best business advice was really find something and commit fully to it. Right. Again, the real estate business for me, I really love real estate, but my core business is wealth consulting, and I'm going full into that business. Real estate is sort of this additional thing on the side, and that's why I think a lot of people, for investing passively, might be the right choice for a lot of people. Investing with proven operators is a really good thing, because you're going to produce more value focusing on a singular thing than you would if you're sort of diversifying your focus into a variety of different things. There's arguments to be made there, but that's the best business advice that I've ever gotten.
Love it, and agree. Well, Clay, what real estate investing advice would you give other business owners or business executives?
I would say the best real estate investing advice is you have to find people that have done what you're aspiring to do, and you have to learn from them. There's a lot of mistakes that if you're all the way down on a low level, like starting out with like a single family home, for example, you got to know that knob and tube wiring is this is what it looks like, and you wouldn't really know that unless you're sort of hand in hand with a mentor or someone like that. And if you're really high up and you're buying multi-family apartment buildings, big ones, or self-storage or industrial or whatever, you want to make sure that you're, especially when you're starting out, that you're aligned with someone that's done this, because you can really get yourself hurt with debt.
Yeah, I love it. Great advice from Clay. Clay, how can people get in touch with you?
If you're interested in just chatting about real estate, chatting about my wealth consulting business, you can reach me at clay@creative-capitalist.com, or reach me at creative-capitalist.com.
Love it. And we will have all of those in the show notes for anybody who's listening. Want to get a hold of Clay for wealth building, get a hold of real estate. So you got any questions for Clay, or you're looking for a new best friend, Clay is your man. He's going to help you. He's been a pleasure to talking to you, Clay. Appreciate you coming on the show today.
I appreciate you having me. It's been a great time.
Thank you for listening to the Executive Real Estate Investing Show. Ready to learn more? Go to executivereishow.com for more episodes and resources to help you create generational wealth through real estate investing. That's executivereishow.com.